the facts are fairly simple. ABC is a broker agent firm in India. XYZ Limited, also an Indian company. ABC has helped XYZ Limited to acquire a huge contract for supplying certain goods in USA. For logistics convenience, what ABC did is directly supplied the goods from UK to USA, which helped him reduce his cost for XYZ reasons.
You want to repeat your?
First, we'll discuss on public answers. So coming back, now ABC has charged XYZ Limited. They have invoiced for rupees 1 lakh plus GST. So now the question with XYZ Limited is whether they can claim the ITC that has been charged to them by ABC.
Yeah, forum is open.
Forum
for the discussion.
So the commission, what the question is intending is to ask is, they have charged me for helping me procure an order for supplying to the USA client. Yeah, it is only for this transaction that they have charged me 1 lakh plus GST.
Under the CGST Act, where in the section 17 have to use it for particular supply. Even the explanation in section 17 to say that exempt supply does not include schedule 3. Currently, nowhere it is written in the Act itself, there should not be any bar to avail that. Even though schedule 3 is keeping it as not a supply of the services, but nowhere in the Act, districts need to avail this ITC, or districts need to say that you have taken ITC pertaining to a schedule supply and cannot take it. But you can be able to take it. It's a very aggressive.
So what my thought process is to take forward on this track. Let us head back sequentially to our income tax provisions. Let's start with the parent section 16(1), which permits me to take input tax for my whatever I have made input tax towards my business activities intended to be used in the course or in the furtherance of my business. So is this transaction what I am doing? Is it covered by the term furtherance of business or not? That's the first and foremost criteria. If I'm falling within this criteria of business and this does not happen to be blocked under section 17(5), I am principally eligible. The reversal part of full may come out at a later date, at a later stage under section 17. But principally, the question that we are dealing with right now is whether I am eligible or not. So, in my view, if I'm dealing it for business purposes, I am eligible. It's not a block credit, and it's for business purpose, I am eligible. That's the thought process that I have.
Any other view?
This is not a supply. This doesn't cover the exempted supply. So it is not even a supply.
Okay.
Can you say zero?
Not a supply at all. Not a supply at all.
So we might have to look at this in both the scenarios, especially after this explanation was introduced or prior to the explanation was introduced. After explanation, we rightly said 17(2) clearly takes this out. So it will not be an exempted supply. Section 17 might not be triggered. 16(1), like Sumit said, you are eligible. 17 might not be triggered. Therefore, net you are eligible for it. We might have to look at this scenario prior to this explanation, whether this would constitute an exempt supply, and accordingly there might be an implication of Rule 42 or something of that. That I would feel like what Saket also said. Possibly this is not a supply. Can it be an exempt supply? If it is not a supply itself, then it should ideally be out of this purview.
Any other views, sir?
Particularly, yes, nowhere in the act it says that anything which is not related will not be allowed. But one has to understand the whole scheme of the act, that the entire process of ITC is with respect to value addition, where you are incurring an expenditure, claiming an ITC for the purpose of, with the intention that when you do business further, in that you have utilized that for which the government is intending to get the tax. And contrary to that also, when you are intending to do a supply which is an exempt supply, the provisions have been made in such a manner that when you are using something which is a common credit or which is a credit, for example, and that credit is not directly in relation to your taxable output, then your sections, Rule 42, etc. will get triggered, and then you have to work out proportionately. So when the intention of the legislature is that even where you are doing a normal taxable supply and you come across a supply which is an exempt supply, there also the common credit or ITC for that matter is intended to be given only to the extent it is attributable to taxable supply. Can you say something which is not attributable to a taxable supply, which is admittedly in the act not as a taxable supply, rather not as supply? Can you claim the credit or claim the benefit of that tax from the government within the scheme of the act? I agree, legally 16 gets fully covered, 17 does not trigger, 75 does not trigger, but ultimately the act has to be seen in the whole scheme of the act. When we go further on the question, there's a 7.5 there. Now we always argue to say that section 1.1 is there and says it is applicable only to India. So transactions which are where one leg is outside India cannot be taxed. So there also you are using something of another act or another section which is not directly related to that section. But you are trying to put across the scheme of the act to say that because this is the scheme of the act, this does not fit into the scheme. So, I mean, as a acting devil's advocate, this is also a counter argument to say that it may not be.
So, counter to the counter, sir.
That is why we are here.
Coming into the holistic view of the entire act, what you just mentioned about the export transaction being not covered under GST Act. So under exports as well, there is no GST end collection by the government of India, and they still allow us the input tax credit and consequent refund also in certain cases, because the government of India is getting forex, which is valuable resource for the government. Over here also, although it's not a taxable supply, although it's not a zero-rate supply, but maybe the government has intentionally kept it out of the purview of exempt supply even after the amendment or prior to the amendment, for the reason that the government is getting the forex in its reserves. It is getting the benefits. There is an upward valuation of the rupee. Therefore, by virtue of implied meanings, there would be an allowance of this input tax.
Agreed on that. Now, whenever they have this intention specifically to do because they are getting some other kind of benefit, the country is getting some other kind of benefit, they make special provisions for it. Therefore, you have that zero rated, and then you have that tax which is allowed, even refund is allowed, etc. Here, when you are talking about the forex also, what is left with you is the differential forex. Vis-a-vis compared to the differential forex, what you are intending to take is the complete value of the tax vis-a-vis that differential forex. So even if you compare that way, the amount of benefit which the government intends to get by way of that differential forex and the amount of tax credit which you are intending to take is not correlatable. Whereas in the export part, it is absolutely correlatable because the whole of the forex is coming to India. Vis-a-vis the entire taxation system, you are getting the benefit, and that's why you are getting the refund. Here, the entire forex is not coming in, because what happens is there is a differential payment, because when you are ordering outside, you are paying forex, and when you are selling, you are getting forex. So what remains with the government probably, even we go by that intention, is remaining is the differential only.
So against the small differential or whatever the big differential also, the whole of the amount of ITC is sought to be taken. So probably it doesn't match into the entire system.
Last rejoinder on that.
Yeah.
The same transaction, had I physically imported the goods, I would have paid IGST, I've got the input tax physically exported. Government would have end of the day realized that differential forex only. Still they allow it. The purpose, what I feel over here, why they have not covered out and out sales as an export transaction, because they might not have jurisdiction, they may not be able to enforce your Rule 96 vis-a-vis your receipt of forex time limits and all those things. So those restrictions may be there, whereby they can't even exactly catch hold of you if you don't export the actual goods out and out, but you still don't get the remittance within the permanent timeline of 6 months to 1 year, whatever. They are not in a position to determine what has actually happened. It has not passed through a customs channel. The Indian authorities have not verified. That's why they are not wanting to give you a refund.
Refund is, we are not on the refund, we are on the ITC.
But now, when they are not wanting to give you a refund, are they denying you the input tax?
In fact, sir, one more thing. If you look at semi credit rules prior to this, the input service was defined in a manner to say if something is used for an output service. Whereas now when we look at section 16, it is altogether drafted in a completely different manner to say anything that is used for your business will be entitled for a credit. So that is where the horizon has been expanded, and that may go with the intent of the law to say that yes, we want to give a seamless credit under the law. So unless specifically excluded, then there shouldn't be any restriction as far as the credit goes.
As you said, it for me, I say that is to not be an input output relation. That is done again. Correct.
Just take it forward, the definition of input service covers it. Absolutely, it is input service. Secondly, from where we are getting that is exempt supply. It is not exempt supply at all. So when you have no exempt supply, you read the condition law has to be very strictly. Intentions, there are a lot of things which is intended, but which is not reflected in the law.
As a matter of going by the intention, they ought to have allowed in that sense export benefit also.
And the more important, we have the government themselves want to which is a neither supply of goods from February 19. If they thought they will be missed out, they can do retrospective amendment. There are so many retrospective amendments they are doing. So having not done, so if consciously they have that means it is permitted. The law, there is no bar. No, then nothing stops them from doing it. Now also they have done from 17 amendments. So in my view, that way, since it is not an exempt supply, it should be eligible by all means, and it fits the criteria of ITC.
And the amendment will also come by way of an explanation.
That also we will see. We will pose one more question there. that the answer to that explanation is very simple. But another difficulty will come. We will go to that in a minute.
Yeah, I think a very healthy discussion. I found it. So yeah, like everybody correctly pointed out that first we actually need to see section 16. What does section 16(1) say? Does that section 16(1) say has any restriction? So here it is only saying goods or services which are used or intended to be used for my furtherance of business, and they should be credited in my electronic credit ledger. So as long as both these conditions are getting satisfied, I think 16(1) we can safely assume that yeah, section 16(1) is being satisfied. Moving ahead to section 17(2), I think a couple of them also pointed out section 17(2). According to me, section 17(2) itself will not trigger, because section 17(2) says partly taxable, partly exempt, and as we discussed, since this is neither taxable, neither exempt, section 17(2) altogether we can bypass. So automatically, I think section 17(3) also right now for this limited purpose, I think we can skip. Even another argument, schedule 3 itself is not an exempt. How can one insert just sale of land? But that we can park aside. But otherwise, even explanation also clearly states that only sale of land, building, only that schedule 3 entry will be treated as exempt. Otherwise, that is also not going to be treated here. So again, section 17(2) not triggered, section 17(3) not an issue. One thing I think that was released by the CBIC was this GST concept and status booklet in August 2019. So there in this para 9.4.26, wherein they specifically spoke about this amendment which they had brought in after 1st February 2019. So there they have clearly mentioned scope of input tax credit has been widened, and it would now have been made available in respect of the following. There are a few list of items there. The first thing they say is or transaction 3. So I think the intention from the CBC booklet itself comes out that they intend to give you the benefit to claim the credit.
They meant after amendment.
Yes.
What is your question before?
That is the next question. So again, so section 17.2 also, if we see, there is a what they've said is the amount of tax credit would be restricted to the portion of taxable supply. Had they said it otherwise, say okay, it would not be eligible to the extent of exempt supplies, and then when we would have said that it is not covered in exempt supply, hence everything else you are eligible. So that could have also been a possibility. But right now, since they have said it as a positive way, probably there could be a hindrance there. Probably in the larger scheme of things, as sir also pointed out, that can that be restricted? Maybe. But I think overall picture, I would believe that they tilt towards the fact that they want to give you the benefit of ITC.
So before going into the precise question, almost please let us know that when if the services are exclusively used for exempted, where is the bar? Hello, is louder. So before going into this question, I will request you all of you to kindly see if the service is wholly used in exempted. Where is the bar? All of us are saying that there is no bar, no bar. Where is the bar for exempted? First, decide that. 17.2 also, one partly for business, partly for other purpose. That is not 17.2 partly for taxable, partly for exempt, only for exempt. Where is the restriction?
The mechanism is there for reversal.
So in terms,
they want to allow it.
17.2 should
First 17.2 should trigger, then only you can go to the mechanism.
So there only thing somebody can say, like if you read 17.6, 17.6 says in any other cases the manner prescribed, how to attribute, but there also you see 17.6.
You will have to go to 40.
Which one, sir?
What is point
17.2, 17.2, sir, where the goods are used partly for taxable.
See, there will be a possibility either fully exempted or partly exempted you may be using. So that means you are covered by 17.2.
No, that's what the 17.2, sir, says, where the goods are both used partly for effecting taxable supplies and partly for effecting exempt supplies. So if it is not partly and partly, if service is such only used in exempted, where is the denial?
So typically 17.2 will cover only common credit.
Common credit, common services only. So therefore, in such
17.6.
government may prescribe the manner in which the credit referred to under subsection 1 and 2 may be attributed. But here again the question may arise, first and foremost I should fill into 17.1 and 17.2. Therefore, the provision which prescribed in under Rule 42, where the attribution takes place, they are saying wholly exempted, keep it set aside. What is the substantive provision for that? Where is the substantive provision for that? As such, there is no substantive provision for that proposition also, but it has to be read in a programmatic manner. Has to be no judge is going to hold that even if wholly used and exempted, still you are entitled for the credit. But insofar as Schedule 3 is concerned, as Sir has also pointed out that in that sense, ideally they should have given export benefit also. And as a matter of fact, if you are providing dutiable, if your 5% transaction is export of goods from India, Your 95% transaction is Schedule 3, out and out supply. The question arises in those cases where whether you can claim the export benefit. So in that case also, sir, even if your 95% transaction is Schedule 3, only 5% of the transaction is out and out supply, you can avail the entire credit. And while claiming refund, you are also entitled to the full refund, because this is considered neither supply nor taxable supply nor exempt supply. When you calculate the refund formula, it will not figure in denominator numerator. Export divided by export, total turnover export is one and the same. You are entitled for the full credit. So you can say this is one of the another method of achieving the same result. Ideally, they should have allowed for given the zero rating status to this transaction also, but they are only discussion purposely on what ground they are avoiding the zero rating benefit. One purpose could be earning foreign exchange. Second could be because the production will be there in the country, or the employment generation will be there. So what precisely the purpose, we don't know at this point of time in that sense. So long as ultimately they are earning the foreign exchange for the country, export benefit should be allowed. And instead of doing in zero rating, they have done through Schedule 3 transaction. And that's what they have clarified also, that we want to extend the credit in Schedule 3 transactions. And as such, no restriction under Section 16, used for business, used out for business. And as Keval said, there is no correlation which earlier required. One-to-one correlation is not required. And therefore, credit can be availed and refund also can be claimed. That you did not have to show in the return, because as such it is not supply, but as an abundant caution, you should not you have suppressed this transaction something to avoid such cases. You can mention in not out and out supply karke the 5F or something, non-GST supplies, column 5F or something. There you can mention, but as such, no statutory requirement to do so. But as abundant caution, you can mention. Yes.
Whole includes a part. Part includes whole.
And that's what the difficulty will be, sir. Because here these are not the rules, sir. First and foremost, you have to see these are only section only. The section has to be in that sense strictly construed. If just like they want to exclude the transaction with respect to sale of land, they're specifically provided so. But in my opinion also, what you are saying is in that sense correct only, that you cannot read the section in isolation. You have to read along with the scheme of the act. Going by the scheme of the act, if transaction is only used in, should be denied. Even if there is no explicit provision for such, the section has to be so construed in order to effect the scheme of the act. And going by that, you are not entitled to. But so far as the present transaction is concerned, they themselves are willing to extend the credit. Then there is the question of any bar. Therefore, credit should be allowed. Second question we can take.
Yeah. So the next one would be, what would happen if the transaction pertain to FY 18-19, that is prior to the amendment when such transactions were brought under Schedule 3?
Any views on that, sir?
So, issues on the taxability of the out and out or the input?
Input tax.
Input tax.
So on input front, I still don't see any issues.
Why?
Whether the explanation is there to include land and building values in exempt supply or not. My transaction, if the government deems, let's say for the sake of argument, that your out was not covered in the schedule, I think one custom circulars and all those things are trying to levy the tax and all those things. So even if they want to levy tax, it's a taxable supply, I'm eligible for full input. Even if we challenge the constitution validity, that this is out of the purview, out of the scope of the Parliament of India to levy a tax, out of the purview of the states to levy a tax, still it's not an exempt supply, being out of the ambit of all these things. So still, why should I consider this to be an exempt supply? Exempt supply, as it been defined under the CGST Act, includes a supply which has been exempted and includes a non-taxable supply. Non-taxable supply again is a supply which
Has to be a
supply which is not within the purview of GST, something like your liquor and petroleum, those kind of products which have been put out of the ambit of GST. So as long as I'm still not fitting within the ambit of exempt supply, I'm good. That is how I view things.
I think again here also
And the circular also not issued a section 11 of the CGST. The exit supply depends under the section. 11. So, I mean, to deem some supplies exempt, you have to issue notification under section 11.
Correct.
I think the next one.
This you want to clarify? So here I just want to clarify that first and foremost, this explanation is not required at all. It's unnecessary. Why it is required? If some transaction is neither supply of goods nor supply of services, it will not automatically fit into the definition of exempt supply and non-taxable supply. And therefore, this explanation itself is not required. And therefore, it's a more tricky question. Schedule 3 was amended from 1st February 19. So whatever item has been added in 1st February 19, what is the position for that? Whether that is required to be treated as exempt supply or not, reversal is required for that also or not. This explanation is not required. All of us are agree. Without this explanation also, there is no exempt supply, non-taxable supply. Therefore, this explanation itself is not required. But the items which are added in Schedule 3 from 1st of February 2019, is there any reversal required for the period prior to that? That you answer, please.
So adding to your point,
just
I probably feel this transaction would have been levied to tax prior to introduction under Schedule 3. I would rather say this transaction would have been covered as a B2C transaction, and you would have actually had to pay tax on this. Had it been prior to introduction of this entry under Schedule 3.
Schedule 3. Okay. Any other?
By automatic, then it would have fallen into the category of taxable supply, and you would have paid tax and you would have any which was clean credit.
So your view, you are saying, sir, that prior to this amendment, tax was required to be paid on these transactions. There is no exemption per se. They were supposed to pay taxes. I don't think anyone has paid taxes on these transactions. Any other view, sir?
So there was a circular issue for high seas. Said that 26 2007. That if you are selling your goods outside India, that is high seas. Not importing the goods into India. The government specifically said you don't have to pay tax on it. Usually when you import the goods into India, you have to pay IGST. I think that particular circular also applicable to this transaction.
Okay, sir.
And there should not be levied tax before that. And obviously, there are 75 years, it has been challenged that it is constitutionally invalid. It alters the constitution and you have the power to levy because it applies to only the whole of India. As per Section 1 of the IGST Act.
Okay. Any other views prior to amendment, whether it is taxable or not?
So we could challenge the levy possibly on one ground. We have one explanation to Article 269A of the Constitution, whereby they have specifically put forth that the supply of goods or services in the course of import in the territory of India shall be deemed to be a supply of goods in the course of interstate trade or commerce. Okay. Similar explanation is absent for your mirror image transaction of exports.
Correct.
So, does the government have the powers in the first place to levy any kind of IGST on the outward leg transactions?
No problem.
That's a fundamental question that comes into play. By virtue of the explanation, was this abundant caution and they already had power, just they want to clarify? Or was it the clarification was absolutely required and the similar clarification of export transaction or the other leg of transaction is absent? And therefore, this levy of GST on any kind of export transaction or out and out transaction would be out of the ambit of the GST Acts.
Assume for a moment, sir, I agree with you that tax was not leviable. Then why credit is allowable to you?
Because it's in the furtherance of a business, sir.
I think the same
thing was GST, and there is no exclusion specifically.
No, but it will. Why it is not fit into the definition of non-taxable supplies?
Because non-taxable supply which is taxable
not leviable, not leviable. Why it is not fit into that?
What level in section 9 they have said no in which category of item?
No, sir, you are saying that this is the transaction out and out supply, and your interpretation is tax is not payable. If tax is not payable, it is not figuring into Schedule 3. Therefore, you cannot say neither supply nor.
First of all, there is no supply.
Prior to
Schedule 3,
non-taxable supply as it reads means supply of goods or services. So prior to Schedule 3, it was still a supply of goods.
Correct.
There was always no supply.
Correct. So if no tax is levied on those transactions, why it will not figure into the definition of non-taxable supply?
Still, they would not have been a supply of goods because supply of goods from a particular. The goods they were not moving out of India. They are foreign.
No. For the GST purposes, moving this thing is not relevant. The contractual supply. Contract supply is there, tax is not payable. Strictly speaking,
but the intention of the government was from the beginning to not.
correct. So there we have to take shelter of that only. So on a plain construction of the section, it may fit into the definition. If you say tax is not payable, it figure into non-taxable supply. If non-taxable supply, then exempt supply, and you have to reverse the credit. It's not the case of any notification or circular, which we can say by way of notification is prospective. Is the amendment in the act itself. It's a very difficult to argue that will apply for retrospective. But only thing we have to argue is because in the prior regime also this transaction out and out supply was not taxable. In the subsequent this thing also from 2019, there is no outward tax on this transaction. Therefore, for the interregnum period also, it has to be construed as interregnum period also exemption should be allowed. There are some judgment to that effect also, to say that prior to that also exemption is there, post that also exemption is there only for the limited period, because intention from the very beginning was not to levy tax. And then besides the reason, if you see, I think in these cases also POPs will not determine, because section 10 talks about other than export and import. Section 11 talks about export and import. By way of necessary implication, section 10 will be applicable only with respect to domestic transaction only. So therefore, if you can argue or contend that in those type of transactions, you are not provided a mechanism to determination of the POPs also, and therefore, and more so when exemption was, this transaction was kept out of the sales tax ambit in the earlier regime, 2019 also out of regime, and whatever amendment is made, merely a cumulative amendment, unintelligent taxing was there, and to remove that, we have introduced this explanation. Therefore, the explanation should be applied retrospectively. This is not explanation, this entry in the Schedule 3 should be made applicable retrospectively. That's only we have to argue. But on a strict construction, it will fill with the definition of non-exempt supply, if you say so. Yes, sir.
Yeah, I'm on that explanation.
17.3 explanation, sir?
What I understood is explanation is explaining the provision.
Correct, sir.
It doesn't go beyond the provision.
Correct, sir.
There is no amendment in the provision. So although it is inserted from February, it is always to be understood that there your priority.
Correct, sir. So what are other items are there in the Schedule 3?
Yes.
For that, this will apply retrospectively. And I'm saying this explanation, sir, remove this explanation from it. Assume for a moment, remove.
Suppose if you go to the benefit to interpret that is
Suppose
from February and already registered.
Sir, 17 only. Sir, I am saying that you reduce.
Only 3 days are coming.
Other entry it will apply. Other entry, sir, even if you remove this explanation, assume for a moment the explanation is not there. And some transaction is like actionable claim is there. That is going to whether that can be considered as exempt supply. Answer is no. For that is supply, but only we are concerned the question what are items added later on, whether that can be considered retrospectively. There it's a very tough to argue, but we can argue.
Schedule 3 items you are telling, although inserted from February 19, earlier there was no exemption. Obviously, there was no exemption.
Correct.
So whether the same logic will apply for high seas?
High seas also
stand on a different footing, because I'm talking about the non-taxable supply. Because there was a circular of customs.
Correct,
also.
sir. That
and the transaction has happened prior to the goods entering the territory of India.
Correct.
So whether treating it as non-taxable supply would also be applicable to high seas transaction. In this situation, yes, but in high seas, whether also it will apply.
No, sir.
Because of the circular, as well as the fact that
this out and out supply and high seas will be a completely
different.
That is the reason why I'm asking whether the same logic apply to being non-taxable would also applicable to high seas.
No, sir. If you want to interpret non-taxable supply, it will fit into definition non-taxable supply. D was the fact whether you're paid or not in that. You are not paid because of the circular. You have not paid so. Then you are this. It will figure into non-taxable. If you are not paid any output tax, then tax is not leviable. Tax is not leviable, then all other consequences of the act follow. The only case you say that Schedule 3 amendment is also retrospective, then you can problem. You can get out of the tax also, you can get out of the problem of credit also. But that's very, very difficult because the amendment is in the statute, because generally all statutes are to be treated as prospective one, as we all know. If it is the case of circular notification, it will be easy to argue, but the amendment in the act itself. It's difficult, but let us hope some point of time it will get it resolved.
In all cases, the reversal has been worked out because of tax.
Yes.
It would stand the test of law.
Yes. Yes.
Although in your existing issue, it is not about, since it is connected, only one issue
Yes,
I
sir.
would like to raise. That after 1st of February 19, that entry schedule 3, inserting those entries, I will say this brokerage is concerned is not at all liable to tax. Why you want to, why brokerage is taxable?
Sir, that entry.
I just give put a one thing.
No, brokerage is because of intermediary, you are saying instead of brokerage, some other services you are receiving.
I just only on this thing, if this person is broker,
Correct,
he is
sir.
renting service to person located in India. That
Correct.
is fine.
Correct.
So, but still this brokerage is considered intermediary. It should
Yes,
be
yes,
list of
yes.
goods and service.
No, I
This is
think we have
neither
taken
goods
a.
nor service, then
Sorry, sir.
this is neither goods nor service.
Correct.
So in that case, how will it be taxable to the rest?
No, sir. If you say now, there's a real question now. If you say intermediary, then place of provision is outside India.
No, I am telling you,
No,
he is
no.
not intermediary. only.
He is not intermediary, then you are liable to be on reverse charge. If it is not intermediary, then you are liable to be on reverse charge. No, sir.
Why? Why? Is that?
Why?
Because he is also in India, no? ABC. XYZ is also in
Default
India.
rule will apply, no, sir. That's what. Sir, if you are intermediate, if that broker happens to be an intermediary, then no tax is required to be paid on reverse charge because place of provision is outside India. If you say that he is not an intermediate, if he is not an intermediary, then default rule apply.
Sir, one minute, Vinay sir, I
sir.
am still not very convinced with your this.
Yes, sir.
Because if you ABC is agent located in India. ABC is broker agent in India. So why enter? I don't understand why RCM you are talking.
No.
Intermediary will also not.
No, one second.
See, ABC is a broker.
ठीक है, sir.
He is in India.
ठीक है, sir.
There is receiver of service also is in India.
ठीक है, sir.
So where is reverse tax?
Assume for a moment we are saying if it is so, but now
Actually, I was asking you something different actually.
Yes, sir.
RCM was not a point.
ठीक है, sir.
Take this example only.
Okay.
Both are in India, sir.
Okay, sir.
And that transaction is also same out and out.
ठीक है.
Everything I agree on this.
ठीक है, sir.
And the date is after 1st February 19.
ठीक है, sir.
Okay, now ABC has rendered service and 1 lakh rupees brokerage received.
ठीक है.
In my view, why tax should be payable, sir?
Why, sir? Why?
So then
I am giving because transaction of not treating a supply of goods or service at the hand of the recipient. Recipient is not neither supply made by the recipient is neither supply of goods nor supply of services. But we are concerned with the brokerage service which I am rendered to you. You are the person who is undertaking out and out supply. I am rendering service to you. Then why my service should be exempt?
So if you now read this way, supply of goods from place in India, that means the transaction of supply is neither goods nor service.
Correct, correct, sir.
So now he is exporting from say from China
To US.
Okay.
And you are rendering service to him.
And he is having office in India.
Correct, sir.
Okay. Now I should be supporting him for supply of goods and service.
ठीक है, sir.
That is not good service, sir. It
Correct.
should be his. So for this law, it is neither goods and service of his, sir.
No, sir. Therefore, only consequences could follow is you are saying that will not fit into the definition of intermediate.
Yes.
Okay, assume okay he is not intermediate.
Okay.
Then why tax should not be payable? Tax is still payable. No, sir? And now yes, no negative statistics, everything is taxable. Na? No, I am only extending one more example. That RCM I am extending it. That if you contend that broker is located outside India and supporting a transaction outside India, in those cases, if it is intermediate, no tax is payable. No tax is payable because place of presence is outside India. If you said he is not an intermediary, then reverse charge you are liable to.
Residual 13.2 will trigger. So
Yes.
39.
I just have one question. If you look at the Schedule 3, how do we understand Schedule 3? Is it similar to what we had a negative list? That means where the power to tax is not there, that is why it is kept under Schedule 3, or it's merely a similar to exemption that I don't want to tax this and therefore I am classifying this as Schedule 3. How do I look
It's
at
a
it?
combination of both. It's a combination of both in that sense. There are certain entries who are put only for the abundant caution in that sense. And not only that, Schedule 3 means that other transactions are also covered, no? Like where the public authority, government is acting as a statutory authority. There also they are notified. They are notified notification also. By way of circular also they have done so. So it's not, it's a combination of both in that sense. Some transaction they don't want to tax it. They want to keep it negative list. Some transaction as a out of abundant caution they have put in. So it's combination of both.
Yes, sir, in this intermediate, they have granted exemption from October 19, when the supplier of goods and the means both are out and out. Now, even without exemption, if this transaction is there out and out, we can say that it was otherwise not. Why they have given exemption? From 1st October 19, they have given exemption. Then why prior to that, we need to say it was taxable? That is what is my issue.
Like prior to that, taxable only, no, sir. Why there's no exemption. And so long as if you say intermediary outside India, not taxable. If you say intermediary is not there, then RCM will apply. Any other questions, sir? Yes, sir.
Discussion. On the goods,
Sir.
there can be exempt for services also.
Trading in services, you mean to say, sir? I am purchasing appointing some subcontractor in South Africa to render service in China. Logistic services. No, sir. Unfortunately, no. Because the Schedule 3 talks about supply of goods only. So if it is supply of services, that will not apply. That will be whatever the consequences of place of supply, based on that transaction will be taxable. नहीं सर आपका एग्जांपल क्या है सर दोनों आउटसाइड इंडिया सप्लायर आल्सो आउटसाइड इंडिया इंटरमीडिएट आउटसाइड इंडिया
दोनों आउटसाइड इंडिया इसमें इधर इंडिया में है
हां
बोथ आर आउटसाइड इट इज एक्सपोर्ट अदर प्रायर टू सितंबर
नहीं सर आपका एग्जांपल में द इंटरमीडिएट इज आउटसाइड इंडिया
इंटरमीडिएट इज इंडिया
ठीक है
एंड अदर टू पीपल आर आउटसाइड इंडिया आई एम प्रोक्योरिंग इंडिया नो आई विल से ही इज नॉट इंटरमीडिएट
that you can argue
perhaps that was a contention that's why they have given exemption.
Maybe. There you can argue. So you can.
Because no people will say I am not intermediate.
Export.
What you are supplying is not goods nor service. So then I am not helping in procuring goods and service.
Correct. So therefore you are saying, sir, a person is supplying goods from China to USA.
Yes.
I am in India.
Yes.
I am supporting the transaction.
Yes.
It falls under Schedule 3.
Correct.
Neither supply of service nor supply of goods. And therefore I am not intermediary.
Yes.
Therefore export
Yes.
perfect.
That was export up to 30th September. So what was happening is I was getting credit etc. Refund. Now they have put it is neither it falls under schedule and they have granted exemption. Now with the exemption, the life has become miserable because my credit has also gone.
But if you claim I am not an intermediary.
There it is.
Brokerage on land.
Brokerage and land intermediaries.
Yes.
So if it has to be supply of goods or service only.
Service.
Correct. Then your argument is perfectly valid. Move on to the next, sir.
So I think this, while explaining only the third question itself was also considered. Whether can we claim the refund if we are going to, if we are saying that ITC is eligible. So, like Vinay ji also discussed that it is not going to come in your numerator, it is not going to come in your denominator, but yet it is going to be a part of your net ITC in the formula. And only one condition that you might need to fulfill is fulfilling section 54(3). That there has to be some exports during that period. If there is some exports, then automatically whatever is the net ITC, you will be able to claim it back.
Correct, sir. So therefore, you are saying, sir, that this is not treated as export. So in those cases, even if your 95% transaction is Schedule 3, still not only you are entitled for the credit, but you are entitled for the export benefit also. Only difficulty will arise if you have some domestic transaction. Suppose 100 rupees is the 90 is the Schedule 3, 6 rupees is the export, 4 rupees is domestic. Then in proportion of 6 and 4, you are entitled. But for that, if you are only Schedule 3 and exports, you are entitled for the entire credit, also refund also.
So the denominator will be 0.
No, denominator will be the supply export.
Export, normal export.
Export and export.
I think so. Whatever is in your numerator, that will automatically be the denominator itself and eligible for full. Next, we move on. Employer-employee. So, two Indian companies who are sister concerns. Both are subsidiaries to a foreign parent company. One of them only deals into exam service, one of the Indian entity. So, as some part of project, the foreign company has deputed an engineer in India to help for PQR Limited, who is dealing into both normal as well as exam supplies. So, in this case, when PQR is going to make payment, whether it will be considered as salary or whether it will be considered as an import of service, and they'll have to pay reverse charge.
What's your view, sir?
He's not an employee of, he's an employee of PQR.
That's the $1 million question, sir. How do you decide? On what basis you say?
Exactly.
That whether that
CGS must be done in India as an employee of the Indian company. Tax.
ठीक है sir. As in, yes, absolutely.
He is an employee now. Because of the application now he is an employee of the
Merely
Indian
because sir,
company.
I started electing TDS, it automatically create an employer-employee relationship. Very doubtful proposition.
The fact that he is deputed, he belongs to somewhere else, and therefore he is deputed over.
The subsidiary and holding are otherwise two independent entities.
Correct.
You are controlling it differently. And secondly, he is already on the payroll of US company. And the contract must be there for deputation. So as a contractual obligation, I am deputing an engineer. And sorry, consideration I recover from you.
Therefore,
My employee becomes, see, on deputation there may be some scope you must have defined that he will be doing it. But it's all one has to do whether he is under my control and all those things. So he is obeying my instruction, he is no more your employee.
okay. Therefore, according to you, sir, it's taxable.
I mean,
Okay, sir.
A very good way to put it would be contract of service or whether it is contract for service. And I think a lot of the past judgments regarding all of these transactions, they have highlighted some key criteria that help determining whether he will be treated as an employer, PQR Limited Indian company would be treated as employer or not. So some examples would be when he is at work here, who has the authority to instruct him? How much does the PQR Indian company have control over his work? Who approves his work? Whether PQR in India is going to take disciplinary action? Whether he is bound by holidays and the work schedule that is determined in the Indian environment? Whether the PQR Limited is vicariously liable for acts of the deputed employee, whether the master servant relation exists or not. So all of those conditions will help us determine that whether PQR Limited could be said as the economic employer of the deputed engineer. If that be the case, then it is a very good possibility to say that yes, employer-employee relationship does exist.
I only one thing.
Yes.
How you have drafted the contract, we don't have clarity.
Exactly.
I
Yeah.
have to put it this way.
Both possibilities are there. So all of these put together. So like we sir also pointed out that TDS deduction could be one criteria. So there are any number of there is no straight jacket formula. That is what we are trying to convey. So if there is no such defined, if we look at all those conditions or the acts, how each of the individuals are behaving, that probably might give us an indication as to whether there exists an employer-employee relationship or not.
Indians on this is fine, but if I put it here is a person I am giving you deputy is engineer, apparent scope is given, and he will work as per the schedule of law. And you have got entire control over him for giving you work. But obviously he will give only engineering related work.
Correct, sir.
Etc. etc. And my contract will be there with you for making the compensation. You are not paying him directly to that. Now in that case, can you say that he is under your control? Because first of all, my job is to give manpower supply to you.
Correct.
For specific work, I have supplied and I am paying him salary. Correct. And I collect X amount from you and I pay him Y, keeping some my margin. How can you prove that he is under your control? Although.
No, correct, sir. Therefore, from the very beginning, he said that there can't be any straight jacket formula. It depends upon facts and circumstances of each case.
In this case, the remittance is directly made to the overseas entity.
A remittance we are making to
So
ourselves.
in normal case, any such a payment, when you see this employer-employee relationship, the payment has to go from the employer to the employee, it cannot go to a third party.
Aisa nahi hai, sir. There can't be. Where is the regulation or something to say that? In that sense, nahi. You have to see the deputation letter or contractual arrangement as to what are the terms and conditions.
If someone is not my employee, someone else is giving, so my contract is with the foreign parent.
Correct, sir.
So that is foreign entity is recruiting someone.
Correct.
So that my contract is with the foreign entity.
Company.
So that means whatever control I have is based on the rights given by his employer. It is not directly given by that individual engineer. So had he given me, then you can say I have a control over him. But I have control over him because someone else has allowed me to exercise control.
Therefore, sir, you have to see the contract between you and the holding company. What that contract provides for. If that contract provides that I am only deputing, for that I am charging this consideration, this thing, certainly that may be taxable. But if the contractual arrangement as such, what is the arrangement? Then I am saying I am providing this employee to you for your exclusive control on this thing. You supervise control. If only for the purpose of that statutory payment, because if he are shifted here in India, he will lose his employment benefit there. Only for that limited purpose, I will be paying salary to him. You reimburse salary to me, I will pay to him. If that is the contract says whatever deficiency, if the employee performs some wrong services, vicarious liability will be on the Indian company. Indian company will be doing the disciplinary action. Time of this thing will be decided by the Indian company. If that is so, then on a holistic reading, why it should not be considered as an employer-employee relationship? So, therefore, we are saying you have to look from the contract to contract. If contract is only providing, I will supply some manpower to you, deputation. That's not the deciding criteria. Merely because saying deputation, it's not going to solve your problem.
So, deducting PDS
is only one of the indicator, not decisive at all. Even though your circular says so, that if you are deducting TDS, then it is considered to be in the nature of employer-employee arrangement. That may be a guiding criteria, but one of the considerations which you have to take into account, not decisive. And
law you are enforced to comply.
Correct. And sir, not only this for negative list service, prior to negative list, all along we are arguing that deputation is not taxable, sir. We have n number of judgments. But for your surprise, sir, recent last week or so we are arguing a matter before the Supreme Court. The Supreme Court is not at all concerned. Deputation here, everything is not concerned. He's only going, show me the contract. Whether contract you are fulfilling the condition of employment, that's the only test on which they are going. For a tribunal lawyer like me, we are just saying, okay, this deputation that is covered. The moment I hear something, deputation is a covered judgment, and that's all. But that's not the Supreme Court is going by that. They are moving into more and more of the contractual relationship. And probably they may take a counter review also. That's what we have been observed. So that is also. Therefore, yes, sir. Yes, sir. Maybe, sir. So that may be your whatever other compliance you are doing, that may not decisive. So several of the criteria you have to apply, and based on that you have to take a balanced approach. You have to take a calculative call as to whether it's the employee or not. Then it's not.
So yeah, so couple of judgments like Vinay also pointed out that if payment of salary is directly made into the overseas bank account of that seconded employee, even in that case they have held that the nature of payment does not decide whether it is employer, whether it is not an employer. In that case, also they had said that employer-employer relationships does still exist. I think any further points to discuss on this? The next point was so while they are hiring a new employee, PQR and RST Limited both decide to hire somebody together, and that person is going to work in both the teams together. Sorry. So in that case, PQR Limited first pays the entire salary, and then they are charging 50% to RST. Now RST is wondering if they start charge GST, they will be bothered because their entire activity is exempt supplies. So in this case, again, how will it be treated?
At least both of them are hiring Mr. So both of them can equally control Mr. All the criteria required for an employer-employee relationship will be fulfilled in this. So this will be covered under schedule.
That again subject to depend upon how the contractual terms. If it is so that merely because first he is making payment and thereafter he is getting reimbursement, should not make any difference. Because he is what this service the first person is doing is making payment on behalf of the second person. For that, what is the consideration? He is not charging any consideration for that. Therefore, it is merely making payment on his behalf. If it happens to be joint employment, then tax should not be there.
I think, yeah. So understanding the conduct of the parties at the start of the induction itself, he is told or he is informed that he is going to work for both of these companies together. Like there are many such cases where group company hires and they are working for all the sister concerns together. If that be the case, and the employer knows at the start of the contract that he is going to work for both, and employer also knows that he has to divide his time to both of these. That itself would help in determining that employer-employee relationship exists vis-a-vis both the companies for that single employee. So, in the case of Franco-Indian Pharmaceuticals, the same case was, fought, and it was given in the favorable that it is an employer-employee relationship.
Supreme Court में क्या होगा sir? We don't know. These are tribunal decisions only.
Moving further, I think the third one, we are still on employer-employee relations. So, Element Limited, as a part of staff welfare, has organized yoga sessions, meditation sessions for benefit of the employees to promote team building every once a month. So, will this activity, if Element recover certain small amounts for the employees so that there is some seriousness. So let's say, for example, they are charging 500 rupees, so that at least there is some seriousness on the employee that chalo, paisa I have paid, so I have to attend that. If that be the case, will that be still covered under employer-employee relationship, or on the part of the company they have to charge GST while recovering the same from their employee. So whether it is covered under employer-employee or not. That is the first part.
सारे client पूछ रहे होंगे sir इसमें. All the client must be asking recovery. In case of recovery is liable. In case not recovering, sir. Related party schedule 1. Not taxable. Recovering taxable, not recovering, not taxable.
Both need to recover it. You're not providing these services. The best you can mention that this is, both are liable to pay to the vendor. Actually, vendor is providing those services. You can mention the employer and employee are jointly have the service recipients. And some portion is paid. For a convenience sake, is routed to the employer.
The only thing is that now recipient is statutorily been defined.
Person
liable to pay consideration. For the service provider, third party service provider. Employee is not liable to pay.
No, so that's what exactly the contract you mentioned.
Mm-hmm.
So that is
no, sir. If there is a joint agreement with the employee, tripartite agreement is there, then no problem.
Not even the joint agreement is, for example, the policy document of the employment document. not with the third party.
Correct.
For the only document we just mentioned that the service is provided or will be taken on your behalf, or and part of it will be contributed by you and part of it contributed by the employer. On that basis, they will mention, and that can be good enough ground.
Why legal ground? Why you say so?
Because it is not as, because I am not rendering these services, I am not providing these services to the employee.
No, in that sense, like whenever I am arranging something.
Sir, the canteen example is canteen.
Assuming it's
That's maybe the underlying reason for the government also to issue circular. Underlying reason as to why they are second time they don't want to issue. But what is the legal answer for that?
Can we say this is just one contract of employment and these are just the elements of that contract? Don't try to split this into multiple contracts. The primary contract is of employment.
It's a part of the trading.
there is a supply from an employer.
It's not net of deduction. Your 1 lakh salary might require 1,000 rupees for yoga. It's not that I'm supposed to give 99,000. I'll pay 1 lakh for what that.
That is the manner of appropriation or calculation. It could have been 99 also. So what basically I'm trying to portray is, once I hire an employee, that's the contract. As a part of that employment contract, there are certain things which I expect from him, there are certain things which he will expect from him. And it has to be a part of that singular employment contract which is out of Schedule 3. Now, within that contract, should we try to split each and every transaction? Like, for example, notice period pay, the decisions which have come, which says it is emanating from the original contract. Now, this is not an independent supply which is given.
There is slightly difference in notice pay. Notice pay is different.
Different. Notice pay is different. That is service rendered by the employer to employee. That Madras High Court is not happily worded in that sense. But
we need to look at the objective why we are doing this. See, what we are essentially trying to see is these refreshments will help in improving the productivity of the employee.
Okay.
Right. So, like for example,
whether it's taxable or not, when a recovery is made from the employee. To my mind, no, because there is no supply. I am not getting a specific supply. I may recover something, but there is a supply line happening from the employee. I am able to supply line happening from third party. I am the recipient and the employee will be the beneficiary. I may recover something, but there is no supply from me.
The beneficiary may not strictly fit into that because you are recovering. The employee in that sense is liable to pay consideration to the employer. So beneficiary may not strictly fit into this.
So it can be recipient, but insofar as employer and employee is concerned, I am not rendering any supply of yoga services to my employee.
There can be concept of trading in service also, no, sir. Not necessarily I should only undertake. If I purchase something and supply something, I am not on my own mind doing so. I am appointed a subcontractor. He is renting service to our principal employer. So in those circumstances, also to say I am only making payment to the school service driver or something. School.
Trading on services, sometimes you can apply it with very concept.
Not in that sense, vague concept, but
basic subcontracting is trading services, right?
I myself will not undertake any activity. I can buy out and sell out.
Yeah.
I did not myself perform. If your ground is on the footing that because I am not doing any activity and therefore it should not be taxable, we are examining that proposition.
So then what is my supply? Let's examine this. What is my supply by employer for 125?
Services. I can give you a live example. I am a practitioner exclusively into GST. My clients require certain service for income tax purpose for which they don't want to go headhunting for other chartered accountants. They simply asking me, Sumit, you take care of my income tax compliance also. For which purpose I am referring the matter back to cable. I am actually not doing anything of income tax, not even I of income tax. I am subcontracted back to doing. Now over here, in this case, over here the contention could be that element is giving a benefit. Some kind of activity is being done in form of yoga sessions which the employees can come and avail. And even instead of doing themselves, having people on their payroll, they put it back to some third-party entities to provide that. Which may they be incurring any profits or losses that may be at cost, whatever it could be. But it could be a trading activity.
Company and employees, there is a service provider will give a relationship exists.
Yeah, maybe.
It could be.
Yes.
No, in this, otherwise also it can exist, but in this case also.
Honestly, I would agree with what Keval sir is saying, that it is one contract, one entire basket where when I joined, I know okay, once a month I will be provided this. So even when I'm joining, I know for that period I'm going to get a leave, so many days of leave.
Typically, yoga and all will not be there in the contract.
No, some benefit or some. Not yoga. So you are also not saying that they are going to have yoga session every month. There could be, they are saying that there will be one activity which will be done a month by the HR.
Typically, that is not the
Not okay.
Will be done, as a team HR policy.
HR policy wise.
But a contract is a policy decision, not a contractual obligation.
Yeah, it will be not specifically, but as a general term, that all HR policies will be happening.
And it may not be a policy. For example, this may not be even a policy where it roll out specifically roll out policy, there will be yoga session. It may be HR will be doing various activities. It's similar to even in the employee contract and otherwise, we will never mention that you will be given a chair and a table and a laptop. So these are the things that are being done, but nothing will be contractually. The answer is whether these are contractually, typically these things are not there in the contract.
So probably to take your argument, we can probably see the entry which says in the course of and in relation to. So that I feel clearly widens the scope to a large extent, and specifically, so in the course of would rather mean while the employment is happening, whatever benefits that I'm getting. In relation to it, further widen it. So probably these two terms would additionally help you to say anything that is done during that period would probably be covered because it is happening only because of the employer-employee agreement, direct or indirect nexus.
So according to you, such kind of things should be there in the agreement, employer-employee agreement.
So that will always be beneficial.
Yeah. If it is not there, then there's a problem.
Correct.
If it is not there, then will there be a separate agreement for this activity? Because in my modified trade, they say there has to be an agreement of supply, and that agreement of supply should have a reciprocal obligation, and the consideration should be activity. So there will be a separate.
No, first and foremost, sir, you have to understand all this CTC, part of CTC, not part of CTC, why it is arising. What is the logic behind that? So when you appoint a contractor or carpenter, provide come to your house and render services. As a part of the contract in that sense, that will provide that electricity and some other services which are required has to be provided by the recipient only. So whatever has been required to be made available by the recipient should not form part of the value of the service rendered by the carpenter. Suppose for example, you are working in a sugar factory and the sugar factory says, we will give you as a part of your salary, we will give you 5 kg of sugar. So whether that 5 kg of sugar will be taxed merely because he is giving in the course of employment relationship, that doesn't mean that will not be taxable. That will be taxable its own merits. Therefore, whatever is required to be made available, whether it is in that sense contract or not, so long as like a table, chair, and that there is no agreement for that. AC, everything is to be made available in order to render service. And that is the reason saying whatever in relation to or in course of the employment which are required to be made available should not form part of the service rendered by the employer. And therefore, according to me, if it is clearly laid down in the term itself, then also it will not be. If it is not, then it is required to be made available. So it should not form part of the, should not liable to GST. Only in the case of if you recover something, I have my own doubt. If you don't recover anything, then if you recover anything, that itself suggests that it is not agreed between the parties. Neither in the written contract, nor in the oral contract. That is the reason you are recovering something from the employer. In those cases, it may be considered that it is not forming part of the contract, and therefore, those wherever you are recovering, GST liability may be there. Per contra, there may be third situation. Suppose your employee is going to the club, you are paying to the club wala. Whether whatever monetary consideration which I am paying, whether that can be considered as supplier service. That's another dimension. Like if you are working in a CA firm, your employer says whatever fee payable to the chartered accountant or whatever fee payable in CTC, he will pay. He is merely reimbursing this transaction. He is only making transaction in money. There is no service at all. There it should not be taxable, but for that. However, whatever you have discussed, one thing it will not be applied in the case of set off. What is the set off transaction? Set off will be the cases. Suppose I am saying you work for 1 month, I will pay 1 lakh rupees salary to you. Another this thing, you work for me, I will pay you 80,000 in cash, and I will provide you the car services on lease this thing to you. You can avail that facility. In those cases, the entire remuneration to be paid is 1 lakh only. But if that is the situation and it is being set off, then this benefit will not be available. In case of set off transaction, you are rendering a service to the employee because he has the option either to receive consideration 1 lakh in the monetary form or partly in monetary, partly non-monetary form. So far as the service rendered by employee to employee is concerned, it will not be. But so far as the service rendered by employer to employee may be taxed. So therefore, according to me, whether it is mentioned in the agreement is not relevant to that extent. But so far as it is required to be provided by the employer, to that extent, it should not form part of the tax relief.
And what about recovery?
Recovery, according to me, is a tax. My opinion, not firm opinion. My is the local. Yes.
So just if these recoveries are a part of my contract, will that make a difference?
No, sir. That's the indication that this facility is not supposed to be this thing by me. You ought to have availed independently these services from third party, but I am arranging the services for you. And therefore, you are recovering, and more so when there is no contract between the ultimate recipient and the provider.
Yes, sir. I think when we take the next one, so now they have an employee who is now going to leave the organization after serving 20 years. They don't want him to go and work for their competitor. So what they are saying is, they'll pay you 30 lakh rupees. You don't work for 5 years with them, with our competitors. So whether that would be taxable in the hands of employee when he is exiting.
Okay.
Clearly, the employee is tolerating. Employee is not working somewhere. He is tolerating.
Again, I think if we're going to fight to, I would rather say whether if it is so. The scheme of the act is such that 7172 removes Schedule 3 out of supply only. So before going to Schedule 2.5, I would first rather try and say if am I able to fit into employer-employee. If I'm able to remove it from there itself, I need not go that side.
See, in your exam question, if the person is parting, the moment he is parting, simultaneously he will enter into this agreement with you for not working for 5 years. That is not in a capacity of employee. I have tendered my resignation today, and simultaneously I have signed this agreement. Ki next 5 years I agree, you pay me 30 lakhs or you have put me. So that time I am not your employee. It's a contract between me and you, not an employer-employee contract. So that way, it is agreeing to
the purpose of business of the employee. Right. This is business of and instead of market.
In that sense, sir, even if employment service is also in the furtherance of business now. Very employment service is also in furtherance of business only, no? Why not? It's not for personal.
employees, employment terms. It's not his business.
His business in the sense the activity which the employee is undertaking is in the course or furtherance of business only. No? The employer's business.
Not employees. His point is 30 lakhs, that's the employee's economy. Now it is not his business. Therefore, it's out of.
But even if one of the activity, one-time activity is also very. Yes. Any other views? No, sir, definitely. So, according to you, sir, it is taxable. According to you, also taxable. Any other views, sir?
If you had employment.
That's what I'm question about to ask. Because the question was not framed in considering that in question in mind. Now answer, sir. Now you are saying it's not in relation.
No, in terms of employment, if it is mentioned as and when you are living, you will have some kind of thing, and then more important is concerned, the appointment letter and the contract for employment is signed obviously on or before employment. Whenever.
In this 20 years.
But this is a consequence of that. If you are trying to say, if I have got an option available, if it is my option, I will say it is one of the options given to me. I may not agree to it. I don't want 30 lakhs, but I want to consider that option is there. Where is the contract?
Therefore, if such conditions,
Part of the contract, you are going to this way, or then the situation is different.
then it's covered by Schedule 3, sir.
Then let me just
apply.
Those kind of conditions, but practical side it may not be there, but fine.
Okay.
So, even if it's not there as employment contract or even after having it in the contract, if something is in relation to his employment, he's agreeing to do this, he's agreeing to not work with someone after his employment, which is in relation to his employment, to do the service with the employer. I don't think that's what it is.
No, but if that fellow is supposed to be your employee, then everything under the sun will be covered under employer-employee relationship. That is also stretched interpretation. In relation to employment, because generally in relation to has to be widest, it should be construed. But in this context, you have to be some immediate or proximate link. You cannot stretch anything, everything under the sun to say the moment he is employee, every service will be under employee. That should not be the correct interpretation. In relation to employment, in this case, according to me, if the employment contract is terminated, there is no employment relationship thereafter, then he is offering you something and you are accepting. These are accepting your own capacity, individual capacity, not in the capacity of an employee of the concern. Those transactions will be taxable. However, if it is forming part of the contract of the employment itself, because not why we are concerned with agreeing to tolerate as a, even if you render accounting service, suppose as an employer, I am working in an organization where I am doing the accounting service. I am a chartered accountant, but I am doing the accounting service. The very same service the other CA is providing. Then that service will not be, that service will be professional service and third party contract service, because the nature of the service rendered by the employee to employer is not relevant. Even though he is still doing the accounting service only, but the moment there happens to be employer-employee relationship, then whatever service is rendered, that will not be decisive. Therefore, whether it is agreeing to tolerate or not or something, so long as he is rendering in the capacity of employer-employee, that should not be taxable. Therefore, if it is forming part of the contract itself in the time of employment agreement itself, that according to me should not be taxable.
Since it's part of the original employment obligation itself.
Effectiveness of this contract comes into the picture only after he retires. Therefore, your employment contract has come to an end at a point of time when he is
not an employee, but what?
And therefore, whether it is based on the relationship.
Okay.
So the question is because what happens was stretching, as you said, you're stretching it too wide. Because when he enters into a contract, you don't know whether it's going to be continuing for 2 years, 5 years, 10 years, 20 years, 30 years for that. No, you just putting there is a non-compete clause or non-disclosure clause in every
Employment
transaction. Clients' details outside. So that is there. And if necessary, it may be compensated. Or let's say it's fixed that okay, if you continue with us for 20 years, we will compensate you. Then that would not be a non-compete agreement probably. It's a living benefit which you're giving. It's an employment benefit which you're giving. Instead of giving him 20 lakhs, you're giving him 40 lakhs.
Okay.
Then it is not termed as a contract for non-compete. And supposing, how we come to know? Tomorrow you go to that. Okay? Whether we can challenge that referring to the original contract. That would have been.
But before that, sir, you must tell me that what is the service is rendered. That agreeing to the obligation. Is agreeing to the obligation. In that sense, that is not a continuous service. Why we are getting confused? Because after some period of time, 5 years period, he will not be do that. But the service which is rendering is the agreeing to that obligation. The service is rendered very moment the contract was entered into. And therefore, that capacity he was in the capacity of employer. So the was the fact that subsequently he is not my employee. The service is rendered in that moment itself, and therefore, yes.
After the contract is terminated, after that this gets triggered.
Correct.
So that non-compete period, I am not going anywhere. I am providing that service.
Yes. Yes.
As you said, it's not taxable. It is a part of the contract.
Yes, sir. It is a part of the original employment contract. If it's not part of the contract, then after the termination of the employee-employee relationship, he is entering into agreement in his own individual capacity, not as an employee of the organization. Whereas the first scenario, when he was the employee of that organization, and pursuant to that employer-employee relationship, he is agreeing to the obligation to not to go somewhere else. So that reason I gave the example of chartered accountant. Don't go by the service nomenclature. Whatever service an employee rendered to the employer in the course or in relation to employment should not be subjected to GST. Therefore, in the contractual sum, he is rendering service to the irrespective of the nomenclature, whether it is agreed to contract, chartered account service, whichever service, so long as the employee-employee relationship is there, during substance of that agreement, service is rendered should not be taxable.
So this means the original contract, the practical steps. Original contract, you always provide a clause saying that in case of when you are leaving, but practically, I don't know whether you what amount.
We are concerned with the question where specifically this amount is being paid. What is the
amount may not be quantified? It may be like a 50% of last paid salary or something. That's what that can be provided. Always provided in the agreement. Just like a gratuity all have been provided. So those computation mechanisms could be provided. The lump sum amount may not be specified, but the computation mechanism could be always provided in the original agreement itself.
Okay. Yes. I think we've covered both aspects which we are looking to cover. That whether it is covered and whether it is not covered. So just to point out that in one income tax case for this case only in Saskian communication, the High Court has specifically held that such income in the hands of employees is salary or profit in lieu of salary and it has to be treated as such. Probably a little help there. Maybe.
But only thing is we have to be very cautious because there not only income tax, there the question was whether salary or profit in lieu of salary. And profit in lieu of salary always either prior to the starting of the employment or season of the employment. Therefore, if it happens to be profit in lieu of salary, we can't take a direct reference from that.
The payment from former employer is also covered. Former employer.
Income tax.
Income tax, yes.
Even after release.
The next one, a little simpler one up till now. I think quickly if I go through, somebody who is selling coffins also decides to provide a service of transporting the deceased. So as we all know, transportation of deceased is part of Schedule 3 activity. So now when he is providing a service together for a lump sum price of 2,500, how will this transaction be treated? What will be the taxability of it?
First and foremost, I don't think that nobody is going to come for taking this opinion. Not our client is that. The question is whether it can be considered a composite supply, mixed supply, not only with respect to the other Schedule 3 entries. So from that significance, he is asking the questions. And more so, the entry says services of funeral, burial, वगैरह. So in those circumstances, whether if I am supplying only coffin, whether that is covered under Schedule 3 is one question. If I supply coffin also, transportation service also rendered, what is the taxability of both these transactions? Third scenario, if I provide a combo, whether taxability will be there or not.
I know that we should be taxable because Schedule 3 is service in relation to burial of funeral of.
It also does not say service in relation to service of.
Services of funeral, burial, crematory,
We are supplying coffee beyond sale of goods. So I get the transaction of sale of goods and it will be taxable.
Okay. Any other view, sir?
It is nothing but crematory and burial service only. Usually the person who
Suppose, sir, I am a dealer in coffins. I have
you are not in the transportation actually. You are in the
I am a dealer. I have a transportation this thing also. Independently, I have a big wholesaler of selling of these coffins. Then also the principle will remain the same, sir.
on the facts of this thing, what is being given here, that combo offer, etc. This person is in a business who is rendering the services more relevant to the funeral or burial, etc. If you are only buying of coffee, is fine. There are a lot of things. On a consolidated this thing is concerned, it is more related to burial, so it fit into that.
Okay, sir. Any other views?
Dominant wise, etc.
Dominant will not. Any other views, sir?
In this case, my job is limited to only sell the coffin and thereafter transport the deceased.
There can be cases. One case I am only selling the coffin. Another case I am providing the coffin, selling coffin also and transportation also.
Absolutely.
Third, I am charging combo.
Absolutely, sir. But beyond this combo, is there any funeral activity
I
am not engaged in? No. Am I responsible for the funeral activity itself?
No.
Which is part of Schedule 3, which could take the coffin into the service of funeral. That is where my question is coming from.
All those activities I am not.
So my job is either you take only the coffin and you take care of the rest by yourself. You can take the transportation from me, take care of the rest by yourself. You can take the combo of both and take the rest by yourself. That's what I'm supposed to do.
Correct.
Based on this, right now, the term composite supplies and mixed supplies, what has been put forth over here, whether it would fit in over there or not. Composite supplies consist of 2 or more taxable supplies of goods or services. So, one of them is not a taxable supply. One of them is not a supply. Coming to mixed supply, 2 or more individual supplies. Against it is supply. So, it may not fit in either.
Therefore,
so finally,
so sir,
I think what Rajiv sir was trying to say, I think an entire basket of service or undertaker service, wherein from A to Z they are helping. That is not the case here. If that would have been the case, probably supplying goods along at that entire basket would have been covered. But not being the case, as rightly pointed out, composite required 1 taxable supplies and mixed supply required 2 individual supplies. And the very beginning of the segregation of activities, section 7.1 and 7.2. 7.2 has an overriding effect. It begins with the words notwithstanding anything contained in subsection 1. Section 7.2 will always prevail over section 7.1, and hence we are going to say that this is not a supply at all. If it is not a supply, I need not go to composite or mixed. If the values are identifiable in the entire contract, I will pay tax only to the extent of this is taxable activity.
Even if it is not identifiable, you have to apply the principle of apportionment, and then you have to pay. And otherwise also the section 15.4 and read with rule, it will be taken care of. Even if individual values are not there, not ascertainable, because you are charging combo amount, then they will say that whatever the sale of coffee independently you are selling to the market, what amount price you are charging, that will.
You mean to say the supply of offerings is equal to the services of?
No, we are not saying so. We are not saying.
Not at all. So transportation of deceased is in that.
Transportation of it. So first of all, he sells the coffin. Right? So whether selling of coffins will cover under Schedule 3?
No.
Then it says along with the coffin, and also providing the
Transportation.
So Schedule 3 will not fit. No?
Exactly. That is what you're saying.
The second activity,
We have to split 2,500 reasonably.
one activity is covered, na sir.
One activity is taxable. one is
Transportation of
scheduled.
deceased person is covered. Therefore, composite and mixed supply principle will not apply here.
Yeah, correct.
And independently, either you have to apportion or go by the valuation rule.
Just can I just
Yes, yes.
this Schedule 3 of the land, which is not there, but even developing land, is there many AR, even triple AR also said?
So the next question is land.
Moving on.
Why also we can quickly.
Yeah, I probably just expressed. So what we were discussing was services of crematorium, burial, funeral. Those activities are covered. What we are here trying to say is that there is a prayer meeting. The person who owns the hall has charged some value and they have charged GST. So whether that is correct or no, I think we can quickly say that yes, they will charge. Obituaries and renting also of Pratna Sabha and all of these are as a taxable activity, they are not covered under Schedule 3. One probably another interesting question could come up is whether the word deceased covers only humans or does it cover animals as well. So a lot of pet-friendly crematorium burials have come up these days. So whether this entry will cover those transactions for their pet dogs or their cats as well.
I don't see any reason for distinction.
Exactly. So simple meaning of deceased would mean somebody who is not living anymore.
It was living before and now not living.
I think why he has included in this particular question is because in UK
VAT law,
a similar provision is there, but there the burial and this thing of the animal is standard rated. They are charging tax on that. Even though definition is also similar to that, but still they are charging. That's precise reason why he is asking. But I don't think Act does not make any such distinction.
in India it does not. In UK there is the guidelines say that only to the extent of dead people they will not levy, but in case of any other living things, it is a taxable activity there.
But the definition portion that is provided is that
No, again deceased.
Have a person over here, sir. Services of funeral, burial, crematorium, mortuary, including transported deceased. Period.
Now, most important is the land and building. Naresh bhai nahi hai. You would have required help from him.
So again here, there are three properties owned by Richard. First, he has a land property which is going to give to his daughter. Second one has a two-story building which a builder has come to him to they will demolish that and build a 10-story, out of which 7 will belong to the builder, 3 will be given to Richard. And whether that activity per se development rights would be taxable or no. And lastly, a 99-year lease given to a school.
Let us take one by one.
Gift
the other.
Gift. So here the intention to cover this question was the fact that the entry says sale of land. Sale requires two conditions: transfer, which is irrevocable, and next is price. So if sale of land does not cover gift, where does this go?
Gift of immovable property, sir. Gift of immovable property.
Gift of immovable
whether any
property
is applicable. It's a immovable property, no doubt. Where the question is whether it is sale. There's a difference between the sale, some sale and gift. We are here concerned with our exemption entry says sale.
Sale of land.
Unless until you fit into the definition of sale of land, sale of buildings. Schedule 3. Correct. Supply now, why it is not supply? It's a transfer. Transfer of property. Sir.
Anything which is not goods is service.
That you will not accept, no problem. But strictly speaking, there is no legal answer to that in that sense. Because
could there be?
What is the service or what is the element that you say?
sir, it's not my thing or that thing you perceive as a service or not. Because what is statutorily been defined? Defined service means anything other than goods. If that is the case, then why there is a need to exclude from the ambit of service in the earlier regime, and why this explanation is required?
The service definition mentioned other than whatever other than goods and services. That's the reason I think that this is a service.
Yes. If you don't go by that, the immovable property is separate status given by the state legislature or whichever this thing, then it's a different matter. But first, before going into that, first you answer, sir, whether it is sale of land or building or not. Let us come to that. In the strict construction of the this thing, it is not sale. However, if the son is a daughter, the father is giving to his daughter, then it is not in the course or furtherance of business, and therefore tax will not be levied. Now, tell me, if the company is giving to his employee gift of immovable property, what will be the situation?
To possibly refer to list 2 of the Constitution. It's a state matter. Exclusive state matter, possibly.
The company giving to employee either under contract or optionally, voluntarily.
Voluntarily.
It will be perquisite.
Perquisite.
Why?
The immovable property is in the name of the company.
Given in kind.
Given in kind means a transfer, no? It's a transfer. It's a gift. It's a gift. So I beg to differ, sir. This is covered because we are dealing with the immovable property that will be governed by Transfer Property Act. And Transfer Property Act says gift means something is transfer of immovable property without any consideration. Here also transfer of immovable property is there. The immovable property which is in the name of company has been transferred to the employee. It's a transfer. Our section is widely worded. Supply include everything under the sun. Supply include transfer also. If that is the case,
there is a consideration. Suppose even if we say
inadequate.
Service rendered by employee to employer is not employer to employee.
No, sir, service rendered by employee. That's why employer is giving flat.
No. Sir, that's what sir, an example आपको पहले दिया that sugar factory वाला. I am working in a sugar factory. You are giving saying that you take the sugars. 5 kilo sugar is being given. The supply of sugar is not taxable, sir. But immovable property here, then don't go into that. On legal, this thing why it cannot be covered. One argument could be the definition of service has to be read in the context when it says other than goods will not cover immovable property, but I don't know what is the basis therefore to say so. Second argument, I think you were mentioning in the Constitution that it is covered, the land and building is covered in the state list. The taxes on land and building will be taken care by the state, but there again I have my own reservations because taxes on land and building, because if you are the owner of the property and property tax has been levied, that is sought to be covered by entry 59, not activity on transfer of the. So on a strict interpretation, I don't have any answer. If you have any legal answer without going to constitutional validity, the law stands as it is. Why gift is not taxable? Yes, sir.
One point. Even if a company is transferring to its employees, can we still take a stand? It is not in the course.
Sir, एक second. Sir. आप छोड़ दो ये employer की वजह से you are getting confused. I am saying let us take an example of exchange. You have a commercial property. I have a residential property. We are exchanging. क्या होगा सर?
It is not in the course of business, sir.
Sir.
Company
to company, sir. Company. Oh, example में sir divert मत करो. Suppose company to company. I have a plot of land in BKC. He has a plot of land in Andheri. Both want to switch. Then.
So, sir, first of all, it is the development sale. The consideration for my sale is coming in kind. So
sir, my difficulty is the Transfer Property Act define all these three terms differently. Sale different, exchange different, gift different.
Yes.
Exchange will be a case where either both of them are the same nature, like goods versus goods is exchange, money versus money is also exchange. And more so this, whatever this terminology is there that is being taken in that sense, there is no defined term what is sale here in the GST Act. And therefore we have to go by the transfer property only. And transfer property, consideration for a price. And here, exchange, there's no, this thing, transfer is there, but no price.
No, price.
That's what
Why
there is no consideration? Barter में I am giving barter के अंदर it's not taxable. Yes sir. Goods barter of goods is not taxable.
Taxable.
Whether you put consideration or not, but thing is that it's the exchange of property. Legally speaking,
I'll say this is my property. I am giving it to you are the corporate.
ठीक है सर.
And I'll say it's for 5 crore.
Correct.
In turn, I want in turn not 5 crore. I want it to find other office of yours.
ठीक है
So it is the
सर.
same
Then what
rule.
is exchange, sir?
Same FSI, and in lieu of that is giving tax. So that is also what is, that is also other.
Then sir, we have to give some meaning. If you are saying this also will be sale of immovable property, then what is exchange?
For example, differentiate the sale and exchange. Earlier in the Income Tax Act, slump exchange was not taxable. Hence, people are restricting slump exchange. Now there is a recent amendment saying that not even the slump sale, but even the slump exchange will be taxable. Hence, there is a difference between the sale and exchange. Sale there has to be compulsory money consideration coming.
ठीक है सर.
There is no consideration to hey, there is no.
हाँ, correct.
Consideration.
Money, monetary. Correct.
It is money more, it is the same.
Correct. So therefore, sir, now answer why exchange is not covered. And this transaction must be frequently happening. I don't have any legal answer, sir. Sorry. I don't have any legal answer. Why it is not covered? It should not be covered. That's what I also feel. But I don't have any legal answers.
Of course, it has very limited relevance, but they are also talking about 2 entries. One is land and building, where they talk about lease, easement, and all of this. They talk about 5, which is construction. So, even if we have to read the term service, will these 2 terms be not relevant to say that this is what we are restricting the taxability and not everything?
No, so Schedule 2 only says whether it is service or supply of goods or services.
What
Nothing
is the
beyond that.
character of service? Other services? Sale of land or transfer
Exchange.
of land.
Exchange. It's a transfer. Transfer is an activity for consideration. Supply. They should have properly worded.
Then if you write supply, it's a big one. Renting also good.
Renting them is specifically covered under declaratory service as a matter of specific
Supply
declaration.
cannot be the supply cannot be covered over here, sir, because in the heading itself it does not consider supply.
So therefore, sir, I am sorry, sir, I don't have any legal answer. It is a food for thought for you. If no answer, then we will see in litigation.
I think in the service tax regime, they had specified that by way of sale, gift, or any other manner.
So service tax exclusion is very wider, as you rightly said.
So if something if they want to cover something else, also maybe sale, comma, and specific 1 or 2 activities they would have taken.
Oh, then they would have added apprehension. You would put development.
This is development and service tax regime will be excluded.
Purposely they are not.
देखेंगे सर litigation. ठीक है सर. Next question is development rights only.
So again, the sale of land covers only land or benefits arising out of land as well.
Yes, sir. All of want to say development is not taxable.
So this will not even be decided by Supreme Court, but a higher Supreme Court.
It will be challenged to say that it is immovable property.
No, it's certainly immovable property, sir. No doubt about that. Is it land?
Is it land?
The sale of land. Or even that sale for the moment we can whether it's a land. Whether land will include benefit arising out of the land also. So by way of statutory definition, you can provide, sir, that land will include this thing also. And if they had the exclusion of sale of immovable property, then certainly we are covered under the law. Exclusion of only of the land. Therefore, according to me, land will not include benefit in the arising out of the rights in the land. Therefore, may be taxable. And more so, if you go by the intention, they themselves just put notification circular that this is in taxable. Any other view, sir?
I was on the earlier point.
Yes,
we discussing that
exchange.
combo services. But one is conferring the services is exempted and sale of coffee is taxable.
Correct.
So when it's a common services, we apportion on some reasonable basis.
Correct.
So land is not a taxable supply; it is excluded. So it's development of land, plotted self-plotted land. So there the entire amount is taxable. So why we can't? They've not taken the call that there should be splitting between land and only the services.
Sir, you are going by the AR itself is. Why you are going by that, sir?
Just to understand, because that same logic, then like this the same logic. And do you say in that kind of plotted sale?
Yeah, according to me, sir, even in those cases, it happens with supply of plot land only, and therefore entire consideration should not be. Even if you want to attribute towards some development, then to the extent the supply of land should be excluded. That's that you perfectly applied that analogy here. But according to me, that should not be.
I'm bringing it to a saleable status. Subdivision and putting all these amenities, lines, and everything. I'm bringing it to saleable status.
It's 99-year lease and lease only. There's a 999 years. Situation outside India is different. They are saying granting major interest in the property. Their situation is different, but our does not make any decision whether 99 years also taxable. Only thing is that like this renting itself, the constitutional validity is pending. The statistic regime itself, constitutional validity is pending in Supreme Court on the same ground, whether it is a tax on land and building. So you see, but for that, it's taxable.
For this transfer of property, 19 years is a transfer.
Lease, not sale. The lease only. You are referring to some decision where it's a deemed sale, practically sale. वो income tax में चलेगा सर इधर. Easy becomes these.
The second generation still can claim back the rights as far as GST is concerned.
So this is level GST.
Yes. Silco is against. SLP is pending in. Rightly so. But there we have some other grounds, whether he's performing any 240W functions. There has not been argued in that case. But apart from that, text.
Moving on, I think actionable claims, fantasy leagues, they are collecting money from individual participants. Certain amount is put together and kept separately. Some of the balance is given back to the winner. So here, first question, what is the treatment of the money pooled by fantasy game, whether taxable or not taxable, and in the hands of the winner, when he receives that amount, whether it will be taxable or not. The point that we are trying to bring out, I think here is actionable claims cover unsecured debt and beneficial interest in a movable property. So whether winning that amount in the pool gets covered in either of those cases. I think actionable claim itself is a topic that can take hours to discuss.
So here, sir, therefore, the essential question is whether it is a game of skill or game of chance. If it happens to be game of chance, then it is covered under gambling. If it is game of skill, then it is not covered under gambling. What the Schedule 3 excludes is actionable claim other than gambling. If it is gambling, then full rate of tax will apply. If it is not gambling, then it will be exempt because it is actionable claim. Therefore, here in this case, various decisions have held. Everywhere they have held that in game of skill, and rightly so. I will not see, because when they say rummy is also game of skill, when they say horse race is also game of skill, if that is the case, then this is also game of skill. Predominantly, if it is of game of chance, then it is gambling.
Personally, believe your every game of chance involves a game of your element of skill.
That may not be. That may not
Any
be.
game would involve some skill. Let's say we are also example.
It's a skill. It's a skill.
It's a skill.
KBC certainly is a game of skill only. KBC skill only.
I'm not gambling over this, but if I see any form of gambling, the computation probabilities, what would be there, all these things, when it comes into play, you could always know that skill that I've acquired. There is a chance element that is involved. I have acquired my driving skill by chance कि कोई आके मुझे ठोके देगा. That's my sheer
snake and ladder. It is just in that sense no.
No, sir. Skill again would be required on. I'll tell you things that come to computation of what are the probabilities of number repeating itself and all these things. When you get into a higher level, I will not know exactly.
Skill at all. One example, according to me, is that ladder and snake game where you
you just place on.
I may not be aware of any such thing. Let's say this is the.
Skill again because based on number that has already come into play on the roulette, I may be having a probability computation of what is the chances that same number could come again.
That would
and
be
then bet on another number.
That's 3-card game, no, sir. Probably I think that's 3-card. So, that's 3-card games. I don't know how to play it, but I think that is the only game of chance. That's what I believe, but I don't know.
So you can play.
Skill, I guess, उसमें भी.
So the skill of shuffling, lot of things come into play. When you're putting on dicing and roulette and all these things.
I don't know
skill of tossing the dice is there. Professional gamblers.
Be part.
So I think once you decide that skill based, so whatever amount that come back, that would be actionable claim only. Couple of places, High Court, Supreme Court, they have held.
Supreme Court pure gambling only. That one example is
next one, a debt securitization example. Special purpose vehicle has converted some illiquid loans of the bank into a product and sold those as a product to an investor against payment of fixed interest. Whether such transfer, assignment, or sale of secured debt would be covered under actionable claims.
Here the difficulty is our definition of actionable claim says
unsecured debt.
Unsecured debt. Here the securitization of the secured debt. So I as a bank, I have given loan to many parties. Now I want to sell all the loans to him and get the upfront amount. Okay, sir. So one form of doing it is I will create a trust. All loans will be transferred to the trust. Trust in turn will issue pass-through certificates to the investors. Investors will subscribe to that. That's one way of doing the transaction. Another way of doing the transaction is I have the debt, I merely assign to him. There is no trust is there in between. Insofar as the transaction between the trust and the investor is concerned, they are only subscribing to securities. So therefore, that is not out of the ambit of the GST. And our FAQ also, banking FAQ specifies so. However, in case of assignment transaction, it is not actionable. It is not security also. So therefore, in assignment transaction, I am also not able to digest. I have given loan of 100 rupees to him. I am transferring to him at 105. So this 100 rupees, in that sense, in a layman terms, I can say it's only transaction in money.
Yes.
No, but that is not transaction in money. I was also under that impression. But it's a movable property. That is a movable property. But movable property is being assigned to him for a consideration. Those transactions, I don't have any clear answers. Nobody is paying in the industry. They are merely relying on the CBIC circular, which says that in the nature of security. But they have clarified, even though they have not specifically said so, but they must have clarified with respect to transaction between trust and the investor. That transaction is certainly transaction in securities, not liable to GST. But the transaction between assignment cases are the first leg of the transaction.
Even in the first case, first you are assigning to that.
Correct.
So what happens to
So that transaction also, tax may be leviable, though tax should not be leviable on the 100
But
rupees.
in most cases, there is a part security involved in it.
Correct.
So then it would not be an unsecured debt. It is, as far as the banking channels are concerned and NBFCs are concerned, they have secured debt. It is on the basis of certain RBI set norms and
Correct.
rules that so much debt, so much security should be provided, whatever.
The initial security generally the mortgage is thing they will take on this. These transactions, this cherry picking, they do one-to-one picking. There's so much security, age of this thing should not be there. So many criteria. Generally, this is secured debt only. There's no part unsecured, part unpart. Secured debt only.
So once it is secured debt, that is what you are transferring. Then probably the tax living not coming.
Why? That's the only question, no, sir. Because secured debt is not an actionable claim. Secured debt is not actionable claim. Secured debt is a movable property. If someone is transferring to other, why tax should not? Ideally, tax should not be, because 100 rupees is the principal debt, principal sum. But I don't have any legal answer.
That is not a security as defined.
That is not security, and that is also movable property. That is not money in that sense.
Now,
sorry, goods only. No? That is a movable property. Movable property.
Intangible.
Goods are physical, tangible, not necessary. Sir. Intellectual property rights also. Sir, you can't say because. Sorry to say that it's not my perception or your perception. But the goods definition says movable property. Only question you got whether it's a movable property or not. Answer is yes. It's a movable property.
So I think the intention of the government is not to tax, and they are digressing from the fact that actionable claims definition excludes secured debt. But when they are given an FAQ, what they said is whether assignment or sale of secured or unsecured debts is liable to GST. So there they answer where sale, transfer, assignment of debts falls in the purview of actionable claims, the same would not be taxable to GST. Their intention is to not tax it, but why and how is still a little questionable. The next one is leviability of GST on securitization transaction undertaken by banks. There they have given a simple answer. Securitized assets, securities are not liable to GST. However, if some service fees, that is taxable. That again, we are not dwelling into that. But again, here in both these cases, they have just simply said that this is security, this is actionable claim, and hence. But when we actually deep dive into both these concepts, somewhere or the other, they fail the test of the actual definition.
Next.
Yeah. So the next one was
fairly simple.
Fairly simple. So the intention here was to ask the question: when it is an out-and-out transaction, the entry only says that there has to the sale of goods from a non-taxable territory to a non-taxable territory without coming into India. They do not talk about who is the recipient. So if both A and B both are in India, and yet the goods are supplied from USA to UK, that transaction will also be covered by out-and-out transactions.
Even though both of them are India, they supply between A to B, but since the goods are being supplied from outside India to outside India, Schedule 3 will apply.
Because Schedule 3 does not specify the recipient. Who is the recipient? It merely talks about
status on the physical supply. The goods are physically moved from outside India to outside India, irrespective of the fact that both of the recipient supplier are in India, it's covered under Schedule.
And the last one, fees paid to court receiver. I think a very celebrated judgment that came very early on by Mumbai, wherein they specifically, Maharashtra government was emphasizing the fact that whatever consideration the court receiver is going to get, that should be taxable in the hands of the court receiver. To which the court said that the court receiver is an adjunct of the court. They work under the guidance and directions of the court. they are assigned by the court and they perform functions within the boundaries or the powers which are assigned to them by the court in that specific order. So that itself would get covered under the exclusion clause, Schedule 3 entry for services provided by courts and tribunals. So again here, he is not an agent or representative of either of the party. He is the officer of the court, and since he is the officer of the court, he is working for the benefit of the interest in the property and not for plaintiff or the defendant. And that being the case, court receiver is a part of the court itself, and hence that his services would not be liable to GST.
Only this thing, the argument was this is not a court, because court is something which decides judicially, which decides dispute within the party. Court receiver is not doing so. Therefore, it will not form part of the, they will not come under the definition of court. But the court says no, it's a function of the High Court of Bombay only. And therefore, it is a High Court court only. And therefore, no GST is liable to it. However, it's not a, whatever amount, like if he is appointed to administer some business, he is undertaking some business and some receipts are there. Those certainly will be taxable, but his service will not be taxable. I don't know, sir, how much we have confused you today.
Thank you.
Better be a good discussion from all of us.